Cathie Wood's the main subject of today's video. Her ARK Ventures is forecasting the artificial intelligence software market's going to reach $14 trillion by 2030. That's not that long. I mean, it's already 2023. We're talking this is in the next 6 to 7 years here. That's a pretty huge number. Want to hear what they have to say in regards to that, kind of give my perspective and opinion. And this matters a significant way if you own stocks like obviously Tesla, Palantir, Google, Microsoft, Meta, Nvidia, AMD. If you own any of those sorts of companies, this matters a significant way. So yeah, looking forward to getting into that one. Second video I want to react to is Nvidia CEO Jensen Huang is going to speak about a few things. Whenever he speaks, I always love to listen to what he has to say. Man's stock is up something like 70,000% or so since the company went public. And so when a man like that speaks, I love to listen, okay? And the last video I want to react to is this one. Younger investors are selling stocks despite plans to contribute more. What is going on there in that survey? I want to, kind of give my perspective and opinion, which it's been a huge divergence in the retail community, specifically over the past year. You go back to 2021, almost everybody was bullish, right? But really over this past 12 months specifically, you've had a massive divergence I've seen in the retail community. You have one side that sold out of stocks, throughout 2022, and they're really not interested in buying stocks in the market, anytime soon, essentially. They're waiting for kind of an all clear, and obviously we're not nowhere close to an all clear in terms of everything looking great. There's still a lot of obviously headwinds and clouds out there, right? And then you have the other group, which is folks like myself that have just been adding assets at very undervalued prices, right? And obviously in the back half of last year, that was a tremendous opportunity, and we were basically stealing money last year with some of those stocks we were buying. And so we just look at it almost like a real estate investor in terms of like we're adding these assets and we're planning on holding them long term, and if they go down, great, we'll buy more assets. And that's the way we look at it. So you really have a divergence of the retail community. So yeah, I'm looking forward to that, getting into that one. I appreciate everybody subscribe to the channel. Thanks for being here. We are now over 27,000 subscribers. So I appreciate everybody. Also, 5-Figure Club just launched in a Patreon Discord chat. So if you're part of that, then and you want to apply for your award, go ahead and fill out an application. That was in the Discord chat there. And then other than that, I recorded a pretty epic workshop last week. It's over a 30-minute workshop. That is, if you're somebody that makes over 6 figures a year, over $100,000 a year, it's talking about kind of investing in this year and beyond, and I think you should get some really good value out of that. It's a free workshop. If you want access to that, that will be pinned comment down there. Let's get into this.
ARK's top holding, making up more than 7% of all of ARK's ETFs by weight. And joining us now is ARK's co-lead of ARK Venture and AI analyst Will Summerlin. Will, it's good to see you again. Nice little shout out there, and I wonder whether or not his comments last night in aggregate made you more or less confident about your Tesla thesis.
Yeah, the way we approach investing in research broadly is through first principles. We really spend a lot of time trying to understand how a new technology is evolving and develop conviction based on that. And when we look at artificial intelligence, we spend a lot of time on cost declines, looking at how the cost to deliver a technology declines over time with scale. And in AI, it's actually declined at more than twice the rate of Moore's Law when it comes to model training since 2012. So it's a 65% cost decline from 2012 to 2020. It's actually accelerated from 65% to 70% from 2020 to 2023. And so as we look at the technology and study the capabilities, we develop conviction. And hearing remarks from Elon directionally about where they're headed certainly increases that confidence.
We've talked with Cathie about this at length, not just regarding Tesla, but all things battery and robotics and AI. Do you think we are finally on the downward slide where this technology starts to feed deflation? And if so, what inning would you say we're in?
Yeah, well, if we look at just the capabilities of artificial intelligence in the context of Tesla, using full self-driving, a car is 5 times safer than a human operator already. And so we're already approaching a point where AI is outperforming humans. FSD is running about 1 million miles a day in autonomous mode. And so I think we're already seeing the technology fully capable of doing a task better than a human. We also see this in the context of knowledge work. So if we step back for a second, human knowledge workers are paid about $32 trillion a year to write code, review legal agreements, et cetera. And we're rapidly approaching a point where domain-specific models can outperform humans at a variety of tasks. We're seeing this in the context of software engineering as a leading indicator. So in software engineering, GitHub put out a study recently showing that software engineers using an AI assistant are more than twice as productive than software engineers without that AI assistant. We also invested through the private side in a company called Replit And they very rapidly scaled to 22 million users who were using this capability to generate lots of useful code for websites, apps, etc. And they're seeing some developers with as much as 80% of their code generated by AI. And so I think we're rapidly approaching this point where AI is capable of automating most tasks that humans do in the context of knowledge work. And that will certainly be deflationary.
I wonder, traditionally, I think of ARC.
The problem with all this AI stuff, okay, don't get too overhyped with all this, okay, because what the biggest issue is the exact same issue that Tesla's been running into with self-driving software over the past 5 years or so, okay? This huge, massive issue is getting that last 5% perfect. That is the hardest thing when it comes to AI, okay? And so what I mean by that essentially is, he's mentioned about reading over legal documents, right? And I'm sure it could do a fine job with a lot of the legal documents, but it's that last 5%, getting that perfect. And until that's perfect, that's a big step to get that last bit perfect. That takes a long time to get that last part perfect, to get it as good as a human, if not better than a human. That's the holy grail, and that's what takes so much time. And as Tesla, who, obviously Elon Musk has felt like they could be at, where Tesla is today, he thought they were going to be there 5 years ago, 6 years ago, right? And the reason it's been so hard to get a vehicle to drive better than a human is that last 5%, that weird situations that happen, that construction zone, that confusing situation and signage that doesn't make any sense, these sorts of situations, right? And driving to space rather than just following a lane, right? And that's the hard part, but that's reality of driving, right? And so everything in AI, it's about getting that last little bit perfect. And until you get that, I don't want to say it's worthless, but it's just like, it's not there. It's not there. And if you're going to count on AI to read a legal document for you, right? Then dang, it better be perfect, or it better be better than a human, or at least as good as a human, right? And if it's not, then I don't want to say it's worthless, but it's pretty dang close to worthless at that point in time, right? So these are the important things to remember. It's that last little bit. And that's why you can't get too overexcited about all this AI, because people are going to find that last bit is where the magic is.
As high growth tech, cutting edge tech kind of companies, innovators, and that fits in with the AI theme. But if AI can truly disrupt all the industries and all the companies and get you productivity and efficiency and old school companies as well, whether you're taking a look there too, a bank, for instance.
Yeah, we're investing in companies that are really at the cutting edge of developing this technology. And when we think about the value accrual that will occur through AI, we think most of it will occur at the application layer, the companies who are developing these AI applications. And again, if we take knowledge work as one example, knowledge workers make $32 trillion a year, and we're already seeing knowledge workers double or triple their productivity using AI assistance. And so the companies that are developing the applications that enable that productivity uplift, we think will capture quite a lot of
Palantir
value. We think in our base case forecast, by 2030, the market for AI software will reach about $14 trillion annually. Just to put that in context, companies currently spend about $1 trillion in enterprise software. And so we think that's where the majority of value accrual will occur, and that's where we're investing.
That's Palantir, man. You know what I mean? Like, what that man was just speaking about in that last minute or so, that is Palantir. And they've been working on this technology for quite some time, way before AI was a buzzword that every CEO wanted to use. And just all this talk about AI, it's going to just drive crazy amounts of business to Palantir. It's ridiculous, right? I mean, what did Alex Karp say on the last conference call? That was probably the biggest thing, in my opinion, he said. And look at the press release. The line that was the most important was, without precedent. The demand for their new AI product is without precedent, he said, okay? And so that just means it's overwhelming in terms of how many companies now are trying to contact Palantir and see what they got going on. That's huge, man. It's going to mean a lot of closed deals for Palantir, and ultimately it's going to mean absolutely massive revenues, and obviously profitability will take care of itself over the next few years. So that's what I read from all that, man. Next one up here, Jensen Huang, Nvidia, which is honestly one of the most important companies in the AI movement. If you didn't know, these guys are the big dogs that are selling the chips. And they're selling these chips, these AI chips, folks, for anywhere between $10,000 to $30,000 per, okay? $10,000 to $30,000 per. I mean, it's insane. And so I don't know if they'll always be able to get that, but they should be able to get these sorts of prices for a while. And Nvidia's going to make so much flipping flapjacking money from this AI movement. It's not even funny. Okay, so let's watch that, and then we'll get to that retail video.
With Nvidia CEO Jensen Huang earlier today, along with ServiceNow CEO Bill McDermott. I started off asking what they thought about Musk's warning on AI. Take a listen.
The industry is spending the necessary and the appropriate amount of time to talk about the peril. There's plenty of technology that we're creating to enable new capabilities for generative AI, but we have to put equal, if not more.
I gotta say this, okay? Jensen Huang, like if you told me he was married to Lisa Su, the AMD CEO, I would believe you. I would literally believe you. I mean, they seem around the same age, and it just seems like their tone, the way they talk, the way they kind of carry themselves, it reminds me so much of each other. It's not even funny, and every time I see them, I just think about, man, those two would make a perfect couple, at least in my opinion. They probably have no interest in each other. It cracks me up, man.
Emphasis into developing technology for safe AI. All of the technologies associated with guardrailing, human feedback reinforcement learning, RLHF, vector databases that are connected to these large language models so that they don't hallucinate. All of those technologies and more are created for this very reason. And we're going to have to advance. The amount of technology that's advancing in this space is just literally daily, and I'm so excited to see computer scientists dedicate themselves to the advancing of safe AI as well as, of course, generative AI. Yeah.
Bill, earlier this year, Jensen sort of previewed the DGX platform, looking to make it easier for enterprises to develop, AI. When you look at the tools necessary to do what ServiceNow needs to do, right, to keep that growth rate going that we're always talking about,
This guy looks like he used to be in some sort of English rock band or something like that. Like, look at him, man. Holy smokers, that's no jokers.
Where does Nvidia fit in? And especially as we're moving from more generative focus to inferencing, right? How do you think about how you get more than your fair share of the value there?
Right now, we have the platform for end-to-end digital transformation. And that's where everything changed. ServiceNow started in IT, but has expanded into giving employees amazing experiences, servicing customers, not only in the front, but the mid and the back office to give them an unbelievable, frictionless experience. And obviously, creators that are innovating and building innovation on the platform now, with the power of generative AI, can do things faster, better, more securely than ever before. So there's a lot of talk about the downside of generative AI.
You know, with this video coming out a few hours ago, I'm kind of interested to see what happened with ServiceNow stock today. Did the stock go up a bunch? Did it go down a bunch? What's going on there? Wait, is ServiceNow not a public company? What? You gotta be flipping my flapjacks. That's strange. Really? I thought they were a public... There it is. Okay. I'm like, I swear they were a public company. So today... Oh, yeah, it looks like they had a nice day. 5% plus move. Must be on the back of this news here. Wow, it's a $100 billion market cap now? Holy smokers, that's no jokers. The peak, almost $700. P ratio 250, but maybe they're at the early stages of profitability here. Price sales ratio 13. Interesting. I might have to take a peek at them. Looks extremely expensive at first glance, but who knows? There might be a little something more to the story.
But I'm at a conference here, which is a ServiceNow's knowledge event, and we're inspiring employees and customers and creators to do things that they never could do before. We also made a major announcement, and I'm proud to join Nvidia in this regard as well, to rise up with ServiceNow, where we're training 1 million people, because people will need to be reskilled, will need to be retooled, but there's going to be more jobs and more exciting jobs than ever before in this intelligence revolution.
Okay. Jensen, I got to ask you about...
Don't forget, folks, 3 quarters ago, 9 months ago, this was a $110 stock. $110.
Technology transfer, because I've been covering the tech industry for a while. I remember, talking to you at San Jose McHenry back, 15 plus years ago when CUDA was first becoming a thing. And something Nvidia has done remarkably well is take research and deep engineering concepts and make them practical in a way that investors have benefited from. I mean, look at the stock. What's your approach to AI where technology transfer goes, making sure that the technology that you're developing, whether it's in chips, whether it's in software, is actually business relevant, as you've managed to do with graphics, cloud, supercomputing?
You were there at ground zero, in fact. You know that we have reinvented computing for the first time since the IBM System 360, 60 years ago. There's $1 trillion worth of data center infrastructure installed in the world based on that old method of doing computation. Now we have accelerated computing, and we have the killer app for accelerated computing called generative AI. I wanted to say something very quickly, and I'll come back and answer that, about what Bill was saying. It's something really important. This partnership is a fantastic growth opportunity for both of us. ServiceNow has the platform, the world's largest enterprise customer reach, understand their challenges and the problems they want to solve, to accelerate themselves, to turbocharge themselves, and they have data.
So how does that affect your growth? How does that help you grow?
And the reason for that is this. In combination with this partnership allows them, gives the two of us the engine for transforming all of that data and domain expertise into generative AI models. We're going to create together hundreds of models, solving thousands of problems. And they'll be deployed, these new models, these new AI super functionalities, if you will, super apps, will be deployed on their platform. And so that's what this partnership is about, transforming the domain expertise and the data that ServiceNow has into AI models that are then deployed on the Now platform. To us, it gives us, for the very first time, reach into 100% of the world's largest companies. This is a very, very big deal, and so I'm very excited about it.
And yeah, so Jensen probably believes they're going to be able to sell them a whole lot of chips. Younger investors selling stocks despite plans to contribute more. What the heck is going on?
Stocks this year, the idea of do what you say and say what you do isn't playing out in the actions of young investors. CNBC's senior personal finance correspondent Sharon Epperson is here. She joins us now with the results of a new and maybe surprising survey released this morning.
Yeah, Andrew, it's quite surprising, actually. Bankrate finds that younger investors claim they're going to invest more than last year, but in fact, they're doing exactly the opposite. More than half of Gen Z and 43% of millennial investors say they expect to put more money into stocks in 2023, more so than Gen X and baby boomers. But here's what they're really doing.
What we see among younger investors is a much higher propensity to have been taking action so far here in 2023 in the face of things like elevated inflation or the higher returns that are available on safe haven cash investments. And there was an increased likelihood of selling or withholding investment rather than buying in response to that.
The survey shows that almost half of Gen Z and a third of millennial investors sold stocks or didn't buy more this year due to elevated inflation. And 38% of Gen Z and 33% of millennial investors sold stocks or didn't buy more due to higher returns on safe haven investments like savings accounts, money market funds, CDs, and government bonds. Financial advisor Jordan Owoye says many young investors are tapping stock-heavy retirement and brokerage accounts for everyday expenses.
For a lot of them, that stock market account is not necessarily that set it and forget it that their, predecessors have been taught. A lot of them are using it pretty actively and treating it as like a, savings account plus.
They may be using that money to pay off credit card debt, buy real estate, or invest in their own business, but they're not leaving it there in the stock market, Andrew.
So how are they taking money out of their retirement accounts to do this, though?
You get a 10%.
Well, a lot of them are.
You get a 10% penalty just for doing that. Then you got to pay tax on top of that if you're over in a retirement account for that. It's a $10% hit, and then you got tax on top of that, federal tax.
Into their 401k. In fact, Voya found
at a loss.
At a loss and at penalty and taxes and not thinking about all of that. A lot of surveys have shown that if they don't have an emergency savings, they're much more likely to tap their retirement accounts for hardship withdrawals they may be able to take, but then taking out 401k loans is seen as, oh, that's okay because I'm paying myself back. But if you miss one of those payments, once you set up the repayment schedule, it's a distribution.
How broad is this? I mean, do you think there's a whole generation that's doing this? Or this is just a...
Two out of 5 Americans, according to a Voya survey, were going into the retirement savings if they didn't have any emergency savings. So it all comes down to having that emergency fund. If you don't have it, the biggest part of your money is retirement.
They're not blowing it on experiences. You know, they're never going to get old. You know that. They're going to live these millennials.
But it's interesting. That whole idea of keeping it in the market for 10 years
from the apples.
Yeah, they're not. No, yeah, that's
different than previous generations at that age.
I do wonder how all these young folks afford to go to these concerts that I watch on TV. You know, I watch Coachella on the TV. You know, like at least a few of the big name artists that I actually care about. And, you know, I'll watch other, you know, concerts or whatever on TV, which is perfectly fine with me. I don't need to be out there raging or, you know, 7 miles back so far that you can barely see who's on stage out there because they're so far away. But these festivals, these concerts are so dang expensive. I don't know if you guys are aware, but I mean, many of them are hundreds of dollars for a ticket. Hundreds of dollars for these big festivals. I mean, many times by the end of it, you're spending $1,000, if not a few $1,000s. And I do sometimes wonder, and I look out there and I'm like, it's a lot of young people, man. A lot of late teenagers, a lot of people in their early 20s. And I'm like, geez, man, y'all got too much money. Or maybe just pulling out retirement money to go to these festivals and concerts.
Yes.
I think so. I think so.
Totally different.
I think so.
They're entitled to everything. Why do they need to save and...
Well, I think they're looking also at other types of ways to make money, trying to think, well, if I have my own business, or I'm going to put the money into my own thing and then launch my own business, or I'm going to buy real estate, or, you know, there are other ways that they're looking at trying to invest and grow their money other than keeping it in that 401k or an IRA.
The parents are going to cover it.
Sharon, thank you.
That's funny. You know, when I started my real estate marketing company, I had to sell a bunch of stocks to start that, right? Because I had to buy my drone, I had to buy a nice DSLR camera and other things. I did not pull that money out of my retirement account, which was a separate dealio, but I did pull some of that money out of, obviously, my brokerage account when I started that business, right? So I can kind of understand it from that context. I think I'm probably the extreme minority of somebody that actually sold stocks in their portfolio. This is back in like 2015 to actually fund a business. I think most of these people that sell out of stocks to do something with it, I don't think they're doing it because they got to buy a bunch of equipment to start a business like I did. It's just my little hunch out there, okay? And at the end of the day, man, you should be growing your assets, not shrinking them. I always say, you know, especially when you're younger, I mean, my gosh, the compounding that does over time is just off the charts. But, you know, it's unfortunate. It is what it is, okay? Build your assets, man. Plant your trees. Build it up into a big pile. And someday it's so much money that, you know, it is what it is, right? And more income than expenses. You have more income than expenses. You don't have to worry about all that, right? Appreciate everybody joining me. As always, much love. Thanks for being subscribed, folks. 27,000 plus subscribers now on the channel. I appreciate y'all. If you want that free 6-figure workshop, check out the pinned comment down there and I'll send that over. Much love and have a great day.